Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine this. A massive truck, vital cargo inside, driving down a rain-slicked highway, somewhere maybe in rural Mexico.
Okay.
The driver's tired, long haul, could easily miss something subtle up ahead. But then just a quiet ping from an onboard system?
An AI alert.
Exactly. An AI alert pops up, identifying a potential collision risk. And just like that, the driver gets the crucial warning, disaster averted.
And that's not science fiction.
Not at all. This is happening right now, every single day. It's the real-world impact of a company called Samsara.
Based out of San Francisco.
That's right. And as this innovator pushes its, well, pretty sophisticated AI and Internet of Things IoT solutions across the globe, I think Europe, with its really strict GDPR data privacy rules.
Very complex.
Or Asia, navigating those incredibly intricate city logistics.
Yeah.
A big question comes up, especially for you, the individual investor.
Right. What's the real story here?
Is Samsara's really ambitious global expansion, is it powerful fuel for explosive growth?
Yeah.
For sustained profitability? Could it boost your portfolio?
Or is it the flip side?
Or does it risk stretching the company too thin, leaving them maybe vulnerable in places they don't fully understand yet?
That's the core tension.
That's what we're going to explore. Every layer. Operations, leadership, financials, all through that lens. By the end, you'll have the insights to form your own view. Is Samsara your next portfolio standout?
Or is it a story where maybe ambition got ahead of execution?
Let's find out. To really get a handle on Samsara's potential, we first need to understand what they actually do, because the core idea is pretty straightforward, actually.
It is, but the impact is huge. Fundamentally, you can think of Samsara as, well, like the central nervous system for physical operations, the backbone of the global economy, really.
Physical operations, so like trucking fleets, warehouses.
Exactly. Huge fleets of trucks, sprawling warehouses, complex construction sites, even critical public utilities. Samsara integrates this whole network of Internet of Things devices.
IoT devices. Got it.
And these aren't simple sensors. They're sophisticated instruments, constantly collecting just immense amounts of raw data.
Like what kind of data?
Oh, everything. Vehicle location, engine diagnostics, driver behavior, down to environmental conditions. But the real magic, the innovation, happens when their AI algorithms kick in.
That's where the intelligence comes from.
Precisely. They take that flood of raw data and transform it into clear, actionable insights, things businesses can actually use immediately. And it's all delivered through a user-friendly subscription cloud platform.
So taking messy real-world data and making it smart.
That's the goal. Make it intelligent and useful right now.
Okay, that helps.
Here's maybe a simple analogy that makes it click. Imagine Samsara is a really sophisticated smartwatch.
Okay.
But not for you. It's for an entire fleet of trucks.
Ah, I see.
Just like your watch tracks steps, heart rate, sleep. Samsara tracks the exact location of every single vehicle. It monitors a whole raft of driver safety metrics. It even optimizes fuel efficiency, minute by minute.
So it's like a real-time pulse on the whole operation.
Exactly. It lets businesses react, adapt, optimize in ways that just weren't possible before.
That smartwatch for your trucks analogy really works. It paints a clear picture.
Yeah.
But I imagine with tech this advanced, there's got to be more complexity under the surface, right?
No, absolutely.
Can you dig into some of those nuances,
Yeah.
especially for investors trying to understand the deeper layers here?
Sure. The core idea is simple, but the technical integration, that's where Samsara really innovates and builds its competitive edge, its moat.
Okay.
For instance, they offer these really powerful API developer tools, application programming interfaces.
Right.
And these aren't just basic interfaces. They let businesses build highly customized applications on top of Samsara's platform.
So tailor-made solutions?
Exactly. A big logistics company could build a custom app that pulls Samsara's real-time data directly into their own dispatch system, or billing, or even predictive maintenance workflows. It becomes seamless.
Making it part of their own system.
That level of customization is a huge value add. Then think about the AI algorithms themselves. They're incredibly sophisticated.
More than just speeding alerts, I assume.
Way more. We're talking algorithms designed to detect subtle, critical events that older systems would totally miss, like signs of driver fatigue.
How do they do that?
By analyzing driving patterns, micro-movements, things a human might not spot. It provides proactive alerts that can genuinely prevent accidents.
That's incredible.
And they can predict potential maintenance issues too. A failing engine part, maybe? long before it becomes a critical breakdown on the side of the road.
Shifting from reactive repairs to proactive planning.
Exactly. That depth of technical integration, getting those precise, actionable insights from raw data, that's the real innovation. And understanding that is important for investors because it speaks to how sticky the platform is, its long-term value.
That makes sense.
And maybe one more parallel. Think about Uber connecting riders and drivers.
Okay.
Samsara does something similar, connecting physical assets, trucks, machines, whole construction sites with their operators.
But with a twist.
A big twist. Regulatory tailoring. This is crucial. Their platform is built to ensure compliance with tons of complex rules that vary by industry, by country, by state even.
Like the electronic logs for truckers in the U.S.
Precisely. The FMCSA ELD requirements. Electronic logging devices. They replace paper logs, track hours of service automatically. Samsara's solution handles that seamlessly.
So they bake compliance right in.
Deeply. And this ability to adapt to specific, wildly different regulations is what makes the platform so adaptable, yet also inherently complex to build and maintain. They're not selling one-size-fits-all. They deliver localized adaptations.
That bespoke compliance must be a powerful differentiator.
It absolutely is,
Yeah.
especially as they expand globally.
That explanation really clarifies the technical and regulatory depth. So with that foundation, what really makes Samsara stand out from the crowd? What's their unique edge?
What truly sets them apart is their distinctive all-in-one connected operations platform. That's the key phrase.
All in one.
Right. A lot of competitors offer pieces, maybe hardware, maybe separate analytics software, standalone camera, fragmented solutions.
Oh, okay.
Samsara integrates it all. Best-in-class IoT hardware, cutting-edge AI software, robust data analytics into one single cohesive ecosystem.
Like an interconnected nervous system, as you said earlier.
Exactly. It simplifies things massively for customers and boosts the value they get because all their operational data flows into one central place.
And that integrated model fuels their business.
Correctly. It fuels their passionate focus on safety and efficiency. That's the core of their economic engine. Let me give you a concrete example.
Please do.
They helped a major logistics firm cut fuel costs by 4%. That's significant.
How?
Through intelligent AI routing. Not just static maps, but dynamic, real-time adjustments for traffic, predicting optimal speeds, advising against excessive idling, even factoring in predictive maintenance alerts to prevent breakdowns that waste fuel.
Wow. It all adds up.
It compounds into substantial savings. And that comprehensive, integrated approach is why they can command high-margin subscriptions. They boast a very strong 73% gross margin on their software.
73%. That's impressive for software.
Very. And this integration uniquely positions them for international tailoring, too. Like in Mexico, fuel theft is a big issue for logistics firms.
Right. You mentioned that.
Samsara adapted its platform with precise geofence alerts, real-time tracking integrated with local security protocols, and it demonstrably cut fuel theft losses by 4% for their clients there.
So they're adapting the core platform, not building entirely new things everywhere.
Exactly. That adaptability, without overextending, is key to fueling growth profitably across different global markets.
That's a compelling picture of how they stand out. Now, let's shift focus. Who are the minds behind this? Who's leading this innovative charge, and what drives their vision?
Well, at the very top, you have the co-founders, Sanjeet Biswas, the CEO, and John Bickett, the CTO.
Okay.
And their story doesn't just start with Samsara. They previously founded Meraki.
Meraki, the networking company Cisco bought.
That's the one. Cisco acquired Meraki for a cool $1.2 billion back in 2012. So these founders have a serious track record of building and scaling successful tech companies.
That definitely provides a strong foundation.
Absolutely. Sanjeet Biswas's expertise in scaling complex tech platforms really shapes Samsara's strategy. You see it in his constant push for integrated IoT solutions designed to navigate those tricky global regulatory hurdles.
Like the GDPR example in Europe.
Exactly. He guided the company in meticulously adapting their AI dash cams for GDPR compliance, encrypted data, consent tools, the works. It's not just about checking boxes. It's a strategic pillar for their global expansion.
And John Bickett, the CTO.
He's the architect of the technical backbone. He leads initiatives like developing those sophisticated AI-powered telematics tailored for emerging markets.
Like the fuel theft solution in Mexico.
Right. He's instrumental in solving specific local problems with cutting-edge tech, making sure it's powerful but also practical and adaptable.
So a strong founding team with proven experience. Who else is key?
The executive team is deep. Dominic Phillips, the CFO, brings crucial financial rigor from previous tech roles, especially guiding capital allocation for international expansion.
Managing the money for growth.
Precisely. Overseeing investments in their Europe, Middle East, and Africa, EMEA operations, navigating Brexit complexities, different tax structures, ensuring financial prudence, not just growth at any cost.
Okay.
Then there's Kiran Sekar, the Chief Product Officer. He drives product innovation. A great example is the launch of AI Multicam.
The 360-degree view camera.
Right, provides unprecedented visibility. It was customized for regions with high accident rates like Latin America, and it's already shown a measurable impact, a 9% reduction in accidents, delivering tangible value.
Sounds like a well-rounded leadership team.
Very much so. And there are others crucial for global operations. Adam El-Touki, the Chief Legal Officer, navigating regulations like ELD in the U.S. and complex data laws elsewhere. Philip van der Wilt leading the EMEA tailoring efforts. Plus, seasoned board members like Hemant Taneja from General Catalyst adding venture insight.
So
Overall, it's an intelligent team making smart, tech-forward decisions. Rapid scaling always has bumps, minor execution hiccups, but their collective experience really positions them well. They learn and adapt quickly.
it definitely sounds like a strong team. Now, what does it mean for investors that Samsara is still very much founder-led? How does that shape things?
That's a really significant point. Samsara is truly founder-led. Sanjeev Biswas and John Bickett are deeply involved in almost all key decisions, product, strategy, international moves.
Hands-on leadership.
Very. This isn't some inherited family business. It's a classic founder-driven tech success story, right out of their Meraki playbook. That direct involvement is often a key trait in high-growth companies.
And how does that align with investors?
Critically, it creates strong alignment of incentives. Both founders hold significant equity stakes. Biswas around 10%, Bickett similar.
So their personal wealth is tied to the company's long-term success.
Directly. Their interests are fundamentally aligned with outside investors. You see this reflected in their disciplined approach to using capital. They prioritize strategic R&D for international adaptations over, say, taking on lots of debt or chasing short-term wins.
A long-term view.
Exactly. That discipline often fosters outperformance, as we've seen in other successful founder-led firms. It usually means valuing sustainable growth.
But the global expansion is a big test, right?
It's the true test. Their track record is impressive, no doubt. But replicating that success on a much larger global scale, navigating all those different markets and rules, that will really show if their vision can avoid the pitfalls of stretching too thin.
The market will be watching closely.
Absolutely. Can their hands-on approach scale effectively worldwide? That's the question.
Okay, beyond the leaders themselves, what's the core mission driving Samsara? What's the culture like inside the organization?
Their mission is crystal clear and, frankly, quite ambitious: to increase the safety, efficiency, and sustainability of operations powering the global economy.
Safety, efficiency, sustainability. The big three for physical operations.
Precisely. And it's not just words on a wall. It fuels their whole vision of a fully connected operations cloud, where AI and IoT work together seamlessly to solve tangible, real-world problems. Problems that hit the bottom line and affect operational integrity for businesses everywhere.
Can you give examples of that mission in action?
Sure. It means constantly innovating to tailor telematics for Mexico's specific security challenges, like cargo theft. It means meticulously aligning their platform with Europe's strict sustainability mandates, helping fleets cut carbon emissions.
Solving real-world pain points.
Exactly. They're not just building tech for tech's sake. They're building precise, adaptable solutions for complex operational issues in industries that are the backbone of global commerce.
And the leadership's vision reflects this.
Consistently. They emphasize scalable, AI-infused platforms that learn and adapt. Sanjeev Biswas often shares stories about Meraki's pivots and strategic shifts.
Learning from past experience.
Right. Those anecdotes directly inspire Samsara's global push, reinforcing that adaptability and visionary thinking are vital. It rallies the team around a shared purpose.
And the company culture. Is it explicitly defined?
Very much so. It's deeply aligned with the mission. Behaviors like innovation, customer obsession, integrity, they're actively reinforced through what they call Samsara values.
Like what?
Principles like focus on customer success, making sure client needs drive decisions, and build for the long term, encouraging sustainable growth over quick wins.
And employees buy into this.
They rally around it through training programs, cross-functional teams that break down silos, clear performance metrics. It ensures that actions, from software updates to market entry, directly propel their goals, like customizing compliance tools for global regulations to foster profitable growth without overreaching.
So a very intentional, cohesive culture.
Absolutely. deeply purpose-driven.
That strong mission and founder-led culture certainly set a powerful stage. So how did Samsara actually get here? What's the history of the defining moments in their journey?
Well, the journey started back in 2015. That's when Sanjit Biswas and John Bickett, fresh off the big Meraki exit, saw this huge, unmet opportunity.
Digitizing physical operations.
Exactly. They saw software transforming so many industries, but the physical world, trucking, construction, manufacturing, was still largely analog, using outdated methods. They saw a vast, untapped market.
Bringing the cloud and IoT to those industries.
Bridging that gap between physical assets and digital intelligence, they moved fast too. Launched their first IoT gateway in 2016.
That foundational hardware piece.
Right, and it gained traction quickly. But a really defining moment, a major turning point, was 2018.
What happened then?
They introduced their AI dash cams. These weren't just recording devices. They were designed to proactively tackle safety regulations and operational needs, especially in U.S. trucking.
And that took off.
Big time. It dramatically boosted revenue. They went from around $100 million to over $400 million by their IPO in 2021. The shares priced at $23 then. That AI safety product was a massive growth catalyst.
Wow. What about post-IPO? Any major challenges?
Oh, yes. The period right after the IPO brought huge challenges, the global supply chain chaos of 2020-2021.
All right, that hit everyone.
But Samsara showed remarkable adaptability. They strategically pivoted, focusing even more on cloud integrations and, importantly, developing innovative electric vehicle, or EV, tracking solutions. They anticipated where the market was heading.
Adapting to the disruption.
And it worked. It helped them achieve that impressive 33% revenue growth, hitting $1.25 billion in fiscal 2025, even in that turbulent environment. Shows their resilience.
Any other key successes along the way?
Definitely. Forging strategic partnerships with major manufacturers like Ford and Volvo for embedded telematics.
So their tech is built right into new vehicles.
Exactly. That massively expands their reach. And they've captured about 1.29% of this huge $117 billion total addressable market in their core areas. Shows real traction.
But it wasn't all smooth sailing. You mentioned challenges.
Right. Those early hardware shortages in 2020 were a critical learning experience. Painful at the time, but it forced them to diversify suppliers, build better inventory management.
Made them stronger in the long run.
Exactly. Built resilience into their supply chain, which is crucial for global scaling. A hard lesson learned.
So where do they stand now?
Currently, their fleet management market share is around 10% in North America. Annual recurring revenue, ARR, hit $1.5 billion. And their adaptability is clear too. Look at how they meticulously tailored AI for Europe's GDPR rules.
Positioning global expansion as a strength, not just a risk.
Precisely. It shows foresight and execution in navigating those complex international waters. Their history is really one of seeing big problems, deploying innovative solutions fast, and adapting deftly to whatever challenges come up.
That's a powerful narrative. Let's dive deeper into their actual offerings now. What are the specific products and services, and how do they operate these globally?
Sure. They offer a really comprehensive suite of products and services, and they've clearly hit strong product market fit. They're serving 1.5 million connected assets, over 20,000 customers worldwide. That's significant reach.
What are the core products?
Okay, first, AI dash cams. Not just recording, but real-time incident detection using AI risky driving, potential collisions, driver safety alerts.
Okay.
Second, vehicle telematics, essential GPS tracking, detailed fuel monitoring, critical data for efficiency, cutting waste, improving dispatch.
Got it.
Third, workforce apps. These handle electronic logging device ELD compliance, automating hours of service logging, making life easier for drivers, ensuring they follow the rules. Fourth, equipment monitoring. Real-time tracking and diagnostics for all sorts of industrial assets generators, heavy machinery on construction sites, boosting uptime and security.
Right.
And finally, site visibility, integrating AI security cameras for safety and security at places like warehouses or depots, intelligent monitoring, event detection.
That's quite a suite. Any recent innovations?
Yes, their commitment to cutting-edge tech is ongoing. The launch of AI Multicam in 2025 is a prime example.
That 360-degree view system again.
Right. Unparalleled visibility around vehicles. And it's already shown a measurable impact, or 9% reduction in accidents in high-risk markets like Latin America. Tangible safety improvements.
So, real results. What about the future? What's on the roadmap?
The future roadmap leans heavily on more AI enhancements. strategic investments in edge processing, for example.
Edge processing, doing the computing right on the device.
Exactly. Critical for instantaneous decisions like a split-second collision alert where any delay is bad news. They're also prioritizing EV integrations for sustainability-focused fleets, tracking battery levels, charging, range optimization.
Meeting the shift to electric.
Absolutely. And future developments look towards broader applications, wearable safety tech for industrial workers, advanced routing solutions, and crucially, all meticulously tailored to global regulations. FMCSA-certified ELDs for the US and Canada, adapting to GDPR in Europe.
So products are positioned as key growth drivers, customized globally.
Precisely. Customizing for international challenges like GDPR data handling is designed to catalyze both growth and profitability.
With such a broad and advanced product line, let's pull back the curtain on how Samsara actually runs the business. Headquarters, global footprint. How do they operationalize all this?
Okay, so their nerve center is headquartered in San Francisco, California. U.S. operations focus heavily on R&D, the engine of their innovation, and also hardware assembly.
Keeping core design and IP close.
Right. Internationally, they've built a significant presence, a strong foothold across Europe, the Middle East, and Africa EMEA, with a key hub in London for sales, support, and regional customization.
Adapting to EU rules and market needs from there.
Exactly. They also have dedicated operations in Mexico, crucial for tailoring telematics for Latin America, and they're actively running pilots in Asia-Pacific, exploring growth in that rapidly digitizing region.
And their facilities, do they own factories?
Mostly no. Most operational facilities globally are leased. This gives them flexibility to scale up or down without heavy capital spending on real estate. And critically, the manufacturing of their IoT devices is outsourced.
Outsourced. Where to?
Mainly to specialized partners in Taiwan. This ensures high scalability for hardware production, again, without massive upfront capital investment in factories.
An asset-light approach.
Very much so. It keeps them agile, reduces fixed costs, and lets them focus capital on R&D and market expansion, not building infrastructure.
That sounds like a very strategic approach. How integrated is the business model then, and what does the supply chain look like in practice, especially with those global ambitions?
They operate on what you call a moderately vertically integrated model,
Meaning
they keep full, tight control over their core IP, the software, the AI algorithms, the data platforms. That's where their unique value lies. But they strategically outsource the physical hardware production.
a hybrid approach. What are the benefits?
Several. First, it significantly strengthens supply chain resilience. We saw this proven during the 2020 disruptions. Diversifying suppliers across regions helped them mitigate the worst of it, avoiding single points of failure.
Made them more robust.
Definitely. Second, it helps lower overall costs. That translates into benefits for clients, like those fuel savings we talked about.
Yeah.
Makes them more cost-efficient than rivals trying full vertical integration.
And the impact in global markets.
It positively affects operations, like letting them tailor IoT solutions for complex European regulations more flexibly. But, and this is important for investors, there's a trade-off.
Yeah.
Lacking full end-to-end control over hardware production does carry a residual risk of delays, especially during periods of super rapid international expansion or big global supply shocks.
A calculated risk for agility and cost savings.
Exactly. For a software-centric company like Samsara, the benefits of flexibility and reduced capital needs often outweigh that risk.
Given that strategic model, what makes Samsara truly defensible? What are its core competitive advantages protecting its market position?
Okay, so Samsara operates in what's called a monopolistically competitive landscape. It's a fragmented IoT and fleet management space with players like Motive, Geotab.
Lots of players.
Yes, but Samsara has carved out a strong niche, holding about 10% of the U.S. market. And that share is well protected by its powerful differentiation in AI integrations. That allows them to sustain profitability even while expanding globally. They're leading with tech.
Do they benefit from economies of scale?
Hugely. As their annual recurring revenue climbs towards $1.5 billion, their unit costs drop significantly, especially in data processing, software development. This lets them outpace smaller rivals.
And those high gross margins reflect that.
Exactly. 73% gross margins on software highlight that cost efficiency as they scale. It's not just about getting bigger, it's about getting more efficient.
What about network effects? Are those at play?
Absolutely, and they're powerful. The more users and connected assets on their platform, 1.5 million and growing, the richer their data pools become.
More data feeds the AI.
Right, leading to more refined AI insights, better safety benchmarks, more accurate predictive maintenance, optimal routing which benefits all users. Their 36% year-over-year user growth amplifies this value, creating a virtuous cycle. That data moat is incredibly hard for competitors to replicate.
Okay. What else defends them?
Their unique counter-positioning through that all-in-one platform, that cohesive ecosystem, is very hard for competitors to copy piece by piece. You see this in their OEM partnerships with Ford, Volvo.
Getting embedded right in the vehicle.
Yeah, that creates a powerful barrier for rivals. High switching costs are another big one.
Hard for customers to leave once they're in.
Exactly. Integrating the hardware, becoming dependent on the software insights, migrating all that data, swapping hardware. It's a major financial and logistical headache. That contributes directly to their impressive 95% customer retention rate. Very sticky.
That ensures stable recurring revenue.
For sure. Brand strength is also key. Samsara has built a trusted name for safety, efficiency, reliability. That allows premium pricing, fosters deep loyalty.
Do they have any cornered resources?
Yes. Unparalleled access to proprietary data from those millions of assets, a growing patent portfolio in AI telematics, and a unique talent pool, rich with Meraki alumni, helps them attract top engineers better than many competitors.
What about process power? Unique ways of doing things.
Definitely. They have unique internal processes for training AI on vast data sets and their systematic approach to regulatory compliance across diverse markets. These create quality and efficiency advantages that are hard to copy.
And proprietary tech aiming for big improvements.
Yes, they aim for a 10x improvement over existing solutions with their AI. Look at multicam versus legacy cameras, superior efficiency, user experience. That pursuit of exponential improvement keeps them ahead.
Did timing play a role?
Perfect timing. They launched right as the IoT boom took off post-2015, riding that wave of digital transformation in physical operations. Gave them a significant first-mover advantage.
And they move fast.
Remarkably fast. Rapid product launches, feature updates, consistently outpacing rivals. That speed discourages competition, especially in their global scaling. Add it all up, the data moat, the network effects, the regulatory tailoring like GDPR compliance. It's a formidable, multi-layered competitive advantage.
That's a fascinating breakdown of their defenses. It sounds truly robust. So from this strong position, where does Samsara go next? What are the biggest expansion opportunities?
They have a very clear, multi-pronged growth strategy. First, deeper market penetration through AI upsells, adding advanced safety apps or routing tools to existing customer subscriptions, boosting ARR per customer.
Getting more from existing clients.
Right. Second, aggressive expansion into new international markets, primarily by adapting their existing proven products. Third, continuous product enhancement, especially tools for the growing EV fleet market.
And what drives this?
Key drivers are international expansion. Europe already brings in 16% of new annual contract value, or ACV, and strategic partnerships, opening new channels globally.
What's the potential size of the prize here?
It's substantial. Huge opportunities in untapped markets like Asia, Latin America, where digitization is just taking off. They can also expand product lines into new areas, maybe wearable safety tech for industrial workers.
Wearables. Interesting.
Yeah, or advanced asset monitoring for remote infrastructure. Plus, potential for strategic M&A, acquiring smaller IoT firms to quickly expand capabilities or customer base.
All aimed at capturing more of that huge market.
Exactly. That $117 billion total addressable market, growing at a 22% compound annual growth rate, CAGR, pronounced KEGR. Samsara's AI tailoring positions them exceptionally well to grab a significant slice of that.
But there are risks with expansion, right? Overextension.
That's the main risk, navigating complex regulations and operational challenges in new territories. But remember the Meraki history.
The founders have done this before.
They have a familiar playbook for navigating these international complexities, drawing on past successes. That provides some reassurance.
And their tech applies broadly.
Very broadly. Fleet management, construction, site security and utilities, manufacturing. This wide applicability underscores the scalability. A core platform tailored for multiple revenue streams boosts their total addressable market significantly.
Can you break down that $117 billion market?
Sure. Roughly 40% is fleet management, 30% asset monitoring, the rest in emerging segments like site security. And it's growing fast, that 22% CAGR. Samsara's AI tailoring lets them solve unique problems across these varied sectors.
So, summarizing the growth drivers.
Continued AI and IoT innovations addressing regulations and operational needs, aggressive international expansion, the power of recurring revenue growth, strategic partnerships and OEM integrations, and a strong focus on sustainability, especially EV solutions. It's a powerful combination.
That paints a compelling picture of opportunity. But every growth story has challenges. What are the major risks Samsara faces, and how resilient are they?
Okay, risks. On the supply chain, they've wisely diversified suppliers across Asia and the US. That enhances resilience.
But still vulnerable to big geopolitical shocks.
Absolutely. Or large-scale economic disruptions. Mitigation involves multi-sourcing key components, distributing risk, it's ongoing risk management.
What about customer diversity? Are they too reliant on one sector?
No, that's a strength. About 50% transport, 20% construction, the rest spread across utilities, manufacturing, etc. Geographically, 80% US now, but international is growing. This diversification helps stabilize revenue if one sector or region slows down.
Is their competitive moat safe, or could it erode?
Their long-term advantages, data moat, network effects, seem sustainable, but there's always a risk. AI commoditization, maybe nimble new entrants, could erode the moat if Samsara doesn't keep innovating aggressively. Continuous innovation is their defense.
Have they shown resilience in tough times? Anti-fragility?
Yes, notably. Their post-COVID pivots, like enhancing remote monitoring, actually strengthened their platform during disruption. It suggests an ability to adapt, learn, even benefit from chaos. That's a powerful trait.
And their longevity? Are they well-positioned for the future?
Exceptionally well-positioned. For future AI IoT trends, demographic shifts like urbanization demanding smarter logistics and safety. Their products will likely be needed far into the future. Plus, that recurring revenue model helps weather economic downturns effectively.
So what are the main risks to growth, specifically?
Intense competition, potential market saturation eventually in the US, and critically, regulatory delays in new international markets complex, slow-moving rules impacting timelines and costs.
Can we distinguish between known and unknown risks?
Sure, known unknowns are things they prepare for specific supply disruptions, cyber threats. Unknown unknowns are the truly unpredictable things. Sudden geopolitical shifts altering global trade, unforeseen AI regulations creating totally new compliance hurdles. The wildcards.
That's a thorough look at the landscape. Let's shift to the numbers. What do the current financials tell us about Samsara's performance?
Okay, the financials really back up the growth story. Fiscal 2025 revenue, $1.25 billion. That's up a robust 33% year over year. Durable expansion.
And looking ahead,
Q1 2026 projections target 24% year-over-year growth, aiming for $1.55 billion revenue. It's like watching a well-tuned truck accelerating smoothly. Strong momentum.
what about profit margins? Still losing money overall.
Gross margins are excellent. 73% on software typical of high-value size. Remember that rhymes with grass. Net losses narrowed significantly to negative $121 million. It shows a clear, disciplined path to break even, likely by 2026, even while investing heavily internationally.
Disciplined growth.
Exactly. And that Rule of 40 metric for SaaS companies.
Right, growth rate plus profit margin.
They hit about 50%, combining growth and free cash flow margin. Anything over 40% signals excellent product market fit and operational efficiency. The return on invested capital is also improving, turning positive as investments yield returns.
How's their balance sheet? Liquidity?
Very healthy. Cash reserves around $500 million. Minimal debt, debt to equity under 0.1. Current ratio over 2. All point to robust liquidity, financial flexibility. Book value grew 20% too.
And free cash flow, you mentioned that turned positive.
Yes, and this is huge. Over $100 million positive free cash flow now. A massive improvement from previous negatives. It signals they're starting to self-fund operations and growth from their own cash generation. A crucial inflection point.
Any other key industry metrics?
Absolutely. Annual recurring revenue, ARR, hit $1.5 billion, up 31%. Customer spending over 100K ARR grew 36%, shows they're landing and expanding with bigger clients, and net revenue retention is 115%.
Meaning existing customers spend 15% more year over year?
On average, yes. Shows incredible stickiness. Those subscriptions are powering the global tailoring without overextension.
That's a strong set of numbers. How does Samsara stack up financially against its peers?
Generally, they outpace competitors. Motive often shows slower growth. Others, like Digi, might have lower margins. Samsara's superior performance on these metrics demonstrates their efficiency in market execution.
What about valuation multiples? Are they expensive?
Their enterprise value to revenue multiple is around 15 times. The industry average is maybe closer to 10 times.
So a premium valuation.
Yes, but it's largely justified by that 30% plus growth, high margins, and the huge market opportunity. Investors clearly have confidence in their future. Price to sales is also around 15 times.
So looking beyond today, what are the key long-term financial trends investors should watch?
The big ones are those multi-year uptrends. Revenue and ARR consistently growing at 30% plus CAGR, margins steadily expanding, showing operational leverage, and that crucial turn to positive free cash flow.
Implying profitable international scaling ahead.
That's what the trajectory strongly suggests. It's not just growth for growth's sake. It looks like disciplined, profitable scaling. Those are the fundamentals of a healthy, growing business.
Let's take the pulse of the market now. What's the latest buzz around Samsara? How are investors talking about it?
Okay, recent events. Their Q2 fiscal 2026 earnings are coming up September 4th, 2025. Highly anticipated.
What will investors be watching for?
Updates on international ARR contributions, especially from Europe, and any potential guidance raised for the full year, maybe towards 26% growth. Also, a recent partnership with Element Fleet boosted their AI safety reach significantly.
What about looking further ahead?
Follow-ups from their Investor Day back in June will give more color on the product roadmap, AI innovations, international plans. Externally, keep an eye on evolving IoT regulations like Europe's AI Act. Q3 results will be key for tracking expansion metrics.
How's the general investor sentiment, particularly individual investors?
Analyzing posts, filtering out the noise, sentiment leans positive, around 70% bullish. Lots of praise for the AI growth, international potential, that regulatory tailoring. You see comments like, their AI adaptation for global regs is vastly underrated catalyst for 10x.
But there are concerns too, the other 30%.
Right. Neutral to negative sentiment focuses on the high valuation and fears of overextension. Comments like, expansion sounds great, but profitability lags. Key priorities for investors are strong ARR beats and tangible AI ROI IDC cited an impressive 815% ROI for their safety solutions. Bearish concerns also mention competition potentially eroding their edge.
So the dominant narrative is
Optimism about expansion as the main growth driver, but definitely with a watchful eye on execution and the path to consistent profitability.
finally, let's bring it all together with valuation. What does the current stock price tell us about the opportunity for investors today?
Right. Valuation. It's really the art of pricing tomorrow's promise today, especially for a high-growth company like Samsara, pushing globally with AI and IoT. We need to look at the methods, the investment theses, and crucially, whether today's price offers a margin of safety for you, the individual investor.
Okay, what's the current price?
As of August 12, 2025, Samsara stock is trading around $32.50 per share.
And margin of safety. Explain that concept again.
It means buying an asset below what you believe its true intrinsic value is, like buying a $100 bill for $70. It's a buffer against errors in your analysis or unexpected market swings. Crucial for Samsara, given the inherent risks in their global expansion strategy. It's your cushion.
Why does valuation matter so much here?
It tells you if the stock looks like a bargain or maybe a bubble. Undervalued. Potential buy signal, overvalued. Warning sign. It guides your decisions in that growth versus profitability debate. What price are you paying for future earnings?
How do analysts typically value a company like Samsara?
Several ways. For intrinsic valuation, discounted cash flow, or DCF, models are common. Projecting future free cash flow expected over $200 million by 2027, growing 25% annually, using a 10% discount rate, gives an intrinsic value around $45 per share. DCF works well for Samsara's recurring revenue.
What about comparing it to peers? Relative valuation.
Right. That EV to revenue multiple of 15x compares to peers around 10x. The premium is justified by Samsara's 30% growth, higher margins, stronger advantages. Price to sales is also 15x. Other methods, like that Rule of 40 score of 50%, further suggest a premium valuation is warranted.
So the best approach.
Often a blend. Combining DCF and relative valuation gives a more comprehensive picture for a growth-focused company like this.
Okay, let's talk about the different investment theses. What's the bear case? The argument against Samsara?
The bear thesis, often voiced by analysts like those on Seeking Alpha, points to the high valuation 15x sales while the company is still posting net losses, an Action 21 MEF FY25. They worry about increasing competition, especially from big OEMs like Ford developing their own tech. And they stress the expansion risk navigating diverse regulations. Potential GDPR fines in Europe could spike costs maybe 20%, hurting margins. Retail investors sometimes echo fears about profitability delays, supply issues seeing 20–30% downside if growth slows significantly.
And the bull case. The argument for Samsara.
The bull thesis, supported by sources like Yahoo Finance, highlights a strong AI competitive edge, that robust 31% ARR growth, and the massive potential to capture more of that $117 billion market, going from 1% maybe to 5%. International expansion, especially Europe's 16% contribution to new ACV, is seen as a huge catalyst. Retail investors get excited about that 815% AI ROI for customers, and the founder-led advantage, predicting maybe over 50% upside.
Which thesis seems more probable right now?
Given the durable growth trends, strong execution, and the sheer size of the market opportunity, the bull thesis currently appears the most compelling and probable outlook.
So wrapping up the valuation picture.
At a current price, around $32.50, the stock seems to be trading at a discount to that bull thesis intrinsic value of roughly $45 from the DCF model. This suggests a meaningful margin of safety for the potential upside from expansion, offering an interesting opportunity for investors looking at this space.
So let's bring it right back to our big question. Is Samsara's bold international playbook rocket fuel for growth and profitability, or does it risk stretching them too thin?
Based on everything we've looked at, it seems Samsara is indeed masterfully tailoring its AI and IoT solutions to conquer those unique international challenges.
Yeah.
It's not haphazard. It looks like a meticulous, strategic expansion built on adaptability.
Can you give those specific examples again? How are they tailored?
In Europe, the platform is fully GDPR-compliant encrypted data, consent tools. AI dash cams adapt to local privacy laws. And the result? A verifiable 9% cut in accident claims for fleets there. Real impact.
Okay.
In Mexico, tackling fuel theft with precise geofence alerts, real-time tracking, integrated with local security. That cut fuel theft losses by 4% for clients. Significant savings.
Mm-hmm.
In Asia, pilots are customizing AI routing for extremely dense traffic, aligning with sustainability goals, optimizing logistics in tough environments.
So these adaptations using their flexible API and partnerships.
Exactly. Partnerships with Volvo, Stellantis.
Yeah.
They position Samsara as a regulatory chameleon. They can adapt. And the proof is that 16% of new ACV came from international markets in 2025. Shows real traction.
But there's still peril, the cost of scaling. Yeah.
Yes, that's the potential peril. Rapid scaling demands heavy, ongoing R&D investment, around 20% of revenue currently. That risks squeezing margins if customer adoption in new markets doesn't keep pace. It's a delicate balance they're navigating.
From a fundamental investment viewpoint, what's the single most important takeaway for our listener today?
The key truth is the supremacy of data. Samsara's 1.5 million connected assets generate this continuous proprietary stream of insights, billions of data points daily. That creates a powerful data moat competitors just can't easily replicate. This data fuels their AI, making solutions smarter, creating a self-reinforcing competitive loop.
And for the individual investor, any specific asymmetric information or edge?
Keep a very close eye on their net revenue retention rate, currently 115%. If that holds steady or climbs during this expansion, profitability by 2026 is highly likely. It shows existing customers are sticking around and spending more, validating the product's value. Also, don't underestimate the founder alignment. Those 10% equity stakes mean they prioritize long-term value, not short-term gains like some peers might. That commitment signals sustainable, compounding returns.
So bottom line, will this global expansion truly catalyze major growth and profitability?
The probability looks high, yes. The ARR projections over $1.5 billion, that 22% market growth, it all supports an optimistic outlook. And it strongly parallels the successful Meraki global pivot under the same founders. They have a proven approach.
And profitability is genuinely emerging.
It is. Positive free cash flow, narrowing losses. But the risk of overextension if regulations shift unpredictably new AI laws perhaps still looms. It's dynamic. But echoing history, remember the Meraki pivot. A similar pattern seems to be unfolding, turning challenges into triumphs by leveraging past experience.
It sounds like a strong trajectory, but there are always unknowns. What uncertainties linger and what should listeners keep monitoring?
Unknowns persist. Unforeseen geopolitical shifts, for example, could potentially hike, cost 10–15%, really testing their resilience. For you, the individual investor, you gain an edge by meticulously tracking international ARR quarterly. If its contribution stays consistently above, say, 20% of total new ACV, that's a strong signal. The global strategy is accelerating and delivering. That's the key metric beyond headlines.
Okay, so what's our ultimate take for the individual investor considering Samsara's strategy?
In sum, Samsara's international strategy looks more like a growth rocket than an overreach, provided it's executed with the precision we've come to expect from these experienced founders. You can confidently consider betting on it for outperformance, given the market size, their unique advantages, and their track record. But always hedge that bet with continued vigilance on valuation. Make sure you're comfortable with the price for that growth. This journey is really just beginning for a company connecting the world's physical operations.
And a final thought to leave you with. As the global economy marches relentlessly towards hyperconnectivity, towards more autonomous operations, what role could a truly integrated AI-powered nervous system for the physical world play? How might it reshape global supply chains, resource use, safety standards, maybe a decade from now? The implications, they stretch far beyond just trucks on a highway. They touch every part of our physical economy.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.